Hello to everyone, my name is Gregor and welcome to our new update Surfing the Elliott Waves, where I will look at some of the most important developments for this week. This video has been brought to you by Orbex. I will look at the 10-year US notes, US dollar index, S&P 500 futures, Euro, Aussie, and dollar yen. Now, if we firstly take a look at the 10-year US notes, well, as you know, this market has seen a bearish continuation, while the US yields have been trading to the upside based on speculations that Fed will hike the rates. This was the case yesterday when they increased rates by 75 basis points. So of course this is not a surprise that US dollar has been strong across the board. There is still a very big gap between central bank policies from different countries. Of course other central banks will try to follow the Fed. So now when we have the another 75% basis points, we can expect that sooner or later other central banks will follow. So from an Elliott wave perspective, I still think that maybe this very aggressive hawkish view could potentially slow down a bit as we approach end of the year. Keep in mind that they are probably targeting around 4%, and that's where there are a lot of speculators that think that Fed will slow down with the current hawkish policy. So if that would be the case, then again we could see some reversals on the markets, because clearly that this hawkish policy from the Fed has been driving the markets for the last few months. And what we are seeing at the moment is a very nice 5-wave drop on the 10-year US notes, or if you want, I have it somewhere here, we have potentially 5 waves up here on the US yields up from July levels. So we know that 5 waves up suggests that we are in very late stages whenever we of this trend, whenever we are already a new high with the 5th wave. However, there's still room for potential 4% to be hit on the 10-year, but still I think that this is a very important structure that may suggest that maybe US dollar will try to slow down. We will see how this will impact the S&P 500 or what stocks will do. They could still remain bearish, even retest June levels, or maybe just stay in consolidation. I will cover this one later on, but before that, let's take a look also on US dollar index. So US dollar index has seen a move to a new high, and so far we have to respect this upper trend line. Notice that market moved to a new high and now it's failing up there at the 61.8%, which is fee projection of that wave 3. So whenever we are in this ending diagonal and you think that this could be a late stages of recovery, then obviously you want to see that 5th wave will be shorter than wave 3. Okay, and wave 3 normally shorter than wave 1. So for now this looks like a very nice potential wedge formation up here, but of course dollar is still very strong across the board. We have seen some reversals in the last few hours after the intervention from Bank of Japan, so this impacted the other currencies as well, because obviously they sold the US dollars. So what we are seeing is also the same impact on other currencies, but it's very important to wait and see what will happen through the day, through the US session, if this current dollar reversals on the intraday basis will stay in play, or will just all of the losses be again erased through the US session. But still, this is a very important chart here, but as I said, from a trading perspective, obviously from a reversal, from confirmation point of view, want to see a reversal and drop back below this lower trend line. So for now, that's just do and die potential resistance zone. I still want to see what will actually happen up here. Now, if we take a look on the S&P 500, as you know, we've been tracking bearish interpretation for a while. We've been looking for more weakness after these only 3 waves of recovery here up into August highs. We are also seeing this broken trend line. So it means that this bearish price action, I should say, is still in play, either for a retest of the lows or market will stay in this choppy range. And if we look here for potential, one interpretation is that you are now headed lower. I'm missing this wave C. I'm heading lower for a wave C, meaning it can move and even retest these 2022 lows, and then we see a recovery, ideally when this fear, okay, on VIX index will be at the extremes. For now, you can still see that there is a gap towards this upper side of this cycle. So it means that the VIX or fear, if you want, is still not at the extreme. Okay, so you definitely want to look for potential important supports and a reversal on the markets whenever we will see fear moving into the extremes, because that's, at least that's how market works. That's when we can look for potential turn when least expected. Okay, so I still think that there is a chance for further upside, or if you want, for further downside on the S&P 500. If from any reason we will stay just consolidating and sideways, especially if US dollar would really slow down, if Fed will be at the end of their policy, then of course what we should consider as well is a potential triangle here in a wave 4. So this one could also be very nice and valid, especially if we will see a rally back above 4,000. Then this choppy price action will resume into a triangle in a wave 4, maybe even in wave B. But in either case, no matter how I look at the S&P 500, even this, if this is maybe a wave 4 triangle, if this is going to be a deeper wave 4 for a drop towards 3,500, in either case the correction is incomplete. Even if we hold this support at 3,650 or 40, there's still ongoing triangle, meaning you need to see waves D and E. So it will be very hard conditions to trade as long we are trading between these two contracting lines. Now let's take a look also on euro dollar. So euro dollar has also saw some recovery. If we look here on the 4-hour chart, we retested the lower trend line here. We moved very closely to 138.2 and 61.8% extensions of a wave 4, so that was my primary target for a fifth wave down. We've been even shorting this euro dollar after on this recent weakness, and the reason was because we identified very nice and clean 5 waves down here for first leg, and then followed 3 wave retracement. So that structure was very bearish and was indication for further weakness on the euro. And so far that's still in play. So we'll see how this market will now unfold or react over the next few sessions, or maybe even more important, how we will end the week. But for now, just keep in mind that as long as we are below parity, I think that this downtrend, just from a basic point of view, is bearish. Okay, parity and these important round figures are uh, uh, always provide some very important bull bear battles. So as long as we are well and far below that level, I think that we should just have to respect that the euro is still in downtrend. Now, looking here on a long-term perspective on euro, just to give you some heads up here, inflation still obviously very high. It has a lot to do with the euro weakness. So if there would be some intervention coming from the ECB, or even more talks about that, similar like Bank of Japan did and intervene today, then obviously this could also be supportive for the euro dollar, and as you know, then this could be much easier to bring down the inflation if your currency is stronger. Now let's take a look also on ASI. Now ASI dollar is finally breaking down. We've been looking for a break to a new low of this year, but still keep in mind that we were looking for a break out of a triangle, and we know the triangle occurs prior to the final move within a higher degree trend. So that's now your final move, sub wave C, that we will tracking we have been tracking for the last few weeks. So you are in a wave C of a free wave drop, and this wave C, okay, or sorry, this free wave drop belongs to a higher degree 7 swing correction. Okay, so that was the first part of a correction, first free wave move, zigzag, then you had a flat for, or irregular if you want, for wave X, and then another free wave move. So that's a just complex correction because you have two, or double zigzag if you want, because you have two frees, okay, in ABC that connects with the wave X in the middle. So it appears that we could be in a very late stages of this current weakness, but still there is room for 640, and meaning that until we see some sharp reversal back above the previous lows, that can actually be a new resistance. So as long as we are below that level, I think it would be too soon to say that we are turning bullish. A rise back towards 6,900, I think that this could be a very nice indication for a turning point. Okay, but for now, still, it's a very bearish market, and we are not seeing any indication of a bottom yet. Now let's take a look finally on dollar yen. So finally, after a lot of talks from Bank of Japan over the last few weeks, if not months, finally it looks like that they have made an intervention in this market. They've been repeating that they are watching these currency rates very closely, and more importantly, what we have seen is that actually the dollar yen has been trading higher over the last few weeks and moved into this very important 147 148 area, which was also the intervention that happened back in 1998. Okay, so again we are now at the same zone, so I'm not surprised if we would see a similar I'm not surprised that we are seeing a similar reaction from Bank of Japan. However, there should be more details released soon. We'll see if this could trigger more weakness here on dollar yen. But from an Elliott wave perspective, I really think that we should consider that we are in some kind of a late stages of this impulse, at least up from August 2021 lows, meaning that there can be, or we can expect some pause, maybe even some bearish price action. Even for our time frame chart suggests that we could be turning into a pullback. Keep in mind that that's now a 5-wave move to the upside. We have seen a very sharp reversal. So if today we finish the day here around 142, below 143 I would say, or possibly even below 141, then I think that more weakness could be in the cards. If by the end of the day we will completely erase the current losses, and let's say we close around 145, then more upside should be coming, because then I would be looking this to be wave 4 flat, and another 148 could be in the cards. Okay, so dollar yen quite tricky right now. I really don't want to touch it here when you have this such as very strong intraday impulses reaction, especially if it's early in the day. Keep in mind that there's still plenty of hours to turn this thing completely around. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon. Bye.